All right, sorry about that, guys. Had to fix a few things here. Taking a look at our trade plan from last night, it is pretty much the same as what we're going to be looking at here in the morning, but I am going to lower this level here. So instead of 430, we're going to look at 390. And then we're going to lower these to 430 and 460, so pretty much the same here. And then to the downside, let's see here. Downside targets are the same, 62 and 36. Basically, we're looking at it as a micro pullback yesterday and today. And if it can stay below that micro pullback, then obviously we are breaking this trend. We are continuing the short-term trend, the bearish trend. And we are breaking the long-term trend, which is the bullish trend. So staying below 390 confirms that micro pullback has more of a bearish value. You have a little bit of a lowercase b shape, but you could say it's a lowercase b or a D shape. So I would say while you are inside of that value, you are more neutral. You're looking for those rotations. But obviously, if you're holding below it, you are leaning more into that lowercase b. And it's leaning more for that continuation of that downtrend. Pretty much the same story on NASDAQ. As you are staying in between that value of yesterday, you're just rotating, pretty neutral. But if you stay below 910, you're using that value bearishly and continuing that short-term trend to the downside, which is breaking that long-term trend. That long-term trend here, if this value continues to find lower lows and lower highs, this trend is obviously being broken. It's already being broken, but we're trying to see if it's a trap. Like, is this a trap and it's going to jump right back into it? Or are we actually breaking this trend and pushing lower? The biggest problem that you want to keep an eye on are these two things down here, the inverse charts that don't really have a significant correlation right now, but it's definitely picking back up. And that is oil and the bond yields. As the bond yields continue to the upside here, 4.7, 5.2, that is definitely pretty bearish for equities. And then as oil continues higher, if the correlation was there, which it is every now and then, that is also bearish, right? So just keep an eye on those bearish correlations. They are definitely starting to ramp up a little bit. Right now, we are just stuck in yesterday's value. We have a very slight bearish bias, but we are not fully just bearish. We're not just completely nuking just yet. Liquidity is fairly low on the open. You're trading like 20 contracts per tick. Not the greatest. Taking a look at the calendar, we only have a little bit of data at 10 o'clock, and that is about it. You can see we're still maintaining that bearish bias. Here's VWAP on NASDAQ, nowhere near VWAP on ES, and already starting to lose that 30-minute low. Yeah, Brent, the channel lines, you can do them manually or you can use a tool called linear regression. And linear regression is basically a mathematical way, a very logical way of finding the channel lines. So instead of like sitting here and subjectively drawing the lines, which most of the time they're going to line up pretty much the same exact way, when the channel is weird like this, the linear regression is going to be a bit off. They're not going to be exactly the same. Like if I were to draw this manually, the bottom line would probably line up, but the top line definitely would not line up because there's not really a way to draw the top line unless I do something like that. So if you draw them manually, it's a bit more subjective. If you use linear regression, it's a bit more mathematical. The linear regression tool, it's been around forever. It's pretty much in every single charting platform. But if you use that tool, you basically just grab where the bottom of the trend is and then wherever like the current top of the trend is. So like if I were to update this, it would be something like that. And typically you want to look at the factor number here. And if it is close to 0.1, 0.1 is like perfect, right? You're never going to get a 0.1, but if you get like a 0.95, 0.9, 0.88, stuff like that, like if it's close to 0.1, it's a very strong channel, right? You can respect that channel. Like for example, this channel on NASDAQ, 0.984. That's one of the highest numbers I've seen on a trend in a very long time. So mathematically, a very strong trend there. The one on ES, a little bit lower, 0.96. If I were to update the NASDAQ one, it would probably get a little bit lower as well. Actually higher, 0.987. So very strong there. But yeah, that's how you grab the channel without doing it the normal way, like doing it the subjective way of grabbing the levels yourself. It's usually a lot faster, and it just makes it less subjective. Yeah, it's called linear regression if you want to look it up. It's not just a trading thing, it's just a like stats thing, mathematical thing. It's the same thing with like correlation coefficient. It's not exactly a trading thing, it's just kind of like a formula. Good morning, Scott, Leo, Brian, Morris, Luis, Stronger, Ram, Asparagus, Adam, Julio, Larry. Good morning, Roman, Hybrid, Lumir, Scott, Crown. Good morning, AT, Chuck, Peter. Good morning, eBay, Mark, Mr. Crab, Ike, Scott. Good morning, Titus. Good morning, Ollie. Good morning, Orion. Good morning, Sam, Greg, Boat, Trevor, Kirito, Andrew, Joseph. Good morning, Lulu, Adriana. Siri, stop listening to me. Every time I talk, my phone starts listening to me. They're spying on me. I just found linear regression today and really quite like it to frame the chart. Yeah, it helps a lot. Like I said, it's more of a logical, like mathematical way to look at the chart instead of like a subjective way. Very different price action here on ES and NASDAQ. I'd probably wait a little bit, see if they can start following each other. Be careful here. But the trick with linear regression is try not to keep updating it. Like you want to get the trend and then just kind of leave it. Don't update it like every single candle, because then you won't really see the trend break. Because it tries to like make a new trend, like every time you use it, right? So if I keep updating this as you're breaking it, it's going to keep trying to put it in the channel. So if it looks like it topped out, just leave your regression there. Let that be the top, right? It's kind of like if we were back here, you could have like left it here. And like this very aggressive trend was obviously breaking because we were going sideways. So you want to let it break the trend, right? You don't want to constantly try to update it every candle. It's like if I had oil here. Where's my tool? Am I blind? Where did it go? There it is. If I had oil here and I went to like do this, it's going to give you a trend. But then if I keep updating it, it's just going to keep messing it up. You see what I mean? So you don't really use it once it starts ranging, once it starts breaking that trend. You want to let it break the trend. Lulu, Adriana, Michael, Power. Good morning, guys. Okay, very different price action here. ES is hitting a new low. NASDAQ is just now losing VWAP, so very nasty trap on VWAP. It's more so a rotation than a trap, I guess you would say. It hit that value high and then kind of rotated back downward. You do not have that rotation on ES, so much weaker on ES. Did not even allow it to rotate back up. You had some bullish block trades on the high of the candle. Typically, like I say, you don't like that. You don't like to see the blocks on the highs or the lows. This one is an exception. There was a wall there. There was a buy wall there. And that got taken. I believe it was a wall. Yeah, there was a wall there. So what level was that? 80? There's a buy wall at 80. Got taken out. Good morning, channel. You got added today and took a nice short from the heat map. That's awesome, man. Yeah, I don't use the heat map too much anymore. I used to use it quite a bit. This doesn't really fit my my style anymore. You can see the profile difference on ES and NASDAQ. ES still showing that kind of lowercase b, and then NASDAQ trying to respect that D shape. You hit the value high, finish that rotation. Now they're trying to finish that rotation on the downside here. You want to stream? I think ES and NASDAQ are like slowly getting back together. They are trying to match up here. The sell was kind of at the same time, and the buy is kind of at the same time. The structure still a bit different. You have a higher low on NASDAQ, and you have a lower low on ES. A lot of block trades this morning, even though we don't really have a lot of data or anything. We have a little bit of data at 10 o'clock, some housing data. Yeah, a lot of action here from the big traders. We had some walls, we have some block trades. Keep an eye on VWAP here. Basically battling between that bearish pressure from like the short-term trend, trying to push you back down, and the micro pullback of yesterday, just kind of chopping you back and forth here. We are still stuck inside of yesterday's value. They're worried about something. There's not a lot of liquidity today. Look at the tape. There are a lot of blue orders coming in. There's only like 10 to 20 contracts per tick. There is data coming out at 10 o'clock, but normally this housing data is not going to cause this much of a of like fear, right? For the liquidity. Possibly some type of headline coming out pretty soon. The yields, yeah, the yields are looking bad for sure. I'm watching them on my other monitor. 5.17 on the 30-year definitely does not help. Probably scaring scaring a lot of people. Trying to break through VWAP here. Keep an eye on VWAP at 97. Good morning, Bella. Still not really following each other on ES and NASDAQ. They're kind of doing their own thing. It's a lot of spread out block trades. We had a wall at 80 as well. It's very indecisive. A couple of minutes, we will have the housing data, the pending home sales. Is an extremely quiet week as far as like data goes. Not a whole lot of data this week. You got FOMC minutes on Wednesday. And that is pretty much it. The yields are coming down a little bit today, so definitely helping some of the buyers if they believe that correlation is there. The 1 minute candle yesterday. Yeah, that was an Iran headline that caused that massive spike out of nowhere. Most likely just algorithms trading it. Okay, you are failing VWAP here, but here is the 10 o'clock data. Seems like the data has been taken bearishly for the most part. Pending home sales 1.4% over 1%, so a little bit better than expected. Still a little bit worse than last month. Well, you just want to pay attention to which one's leading, so if they have like a really big move, then the other one's probably going to follow. Right now, there's no clear leader. They're kind of just doing their own thing. But if one of them is just constantly making new highs or making new lows before the other one, then it just gives you a little bit of a warning on kind of what's going to happen. Pretty red across the board. A little bit of green in some tech companies. Mostly red. Value companies are doing okay. Kind of the blue chip companies. Still showing weakness, not allowing those rotations. Keep an eye on that overnight low and possibly that prior value. VWAP targets being hit on ES. It's hard to say it's a VWAP trade on NASDAQ. It's more of just a rotation because they're not really respecting VWAP. It's mostly breaking VWAP on both sides. So I would say NASDAQ, more of just a standard rotation. ES, very clearly respecting VWAP. So here is your VWAP conservative target, probably also your aggressive target, depending on how aggressive you are. Yeah, I think we've got a few single prints below as well. Or did we fill the close ones in? We filled the close ones in. We have a poor low, poor low, poor high, and then single print down to 40. So we got a couple of problems going back down to 240. There's that daily pivot we talked about. First orange pivot in a very long time. We swept it, and we're holding below it. So holding below 435, not looking too good. This weekly, we talked about the bands. We talked about being outside those wick sniper bands. Very statistically improbable, right? It doesn't really happen very, very often. You have a full week outside of it here. So now we're coming back down to those bands. That is a lot healthier. We had the pivot that we talked about many weeks ago and the pinch. So you had the pivot, you had the pinch, where you were pinching in one direction here. The pinch is actually not done yet. So if this wants to continue going up, it can. You do have a little bit of room left. It's not like fully topped out. If it really wanted to, it could probably go up for like 1 or 2 more weeks. But it's looking a little extended, so best if it doesn't do that. What else did we talk about recently? Let's see here. That's pretty much everything. Daily trend coming to an end. Losing the ADMA. Keep an eye on that trail. 285. Yeah, basically, long story short, there's a lot of cracks. A lot of cracks showing on the higher time frames. Breaking the trend. Extended on the weekly. Losing the ADMA. Hey, Stronger, have a good rest of your day, man. I'll see you tomorrow. I was going to say have a good weekend, but it's Tuesday. We're pretty far from the weekend. Yeah, exactly, channel. We're in a weird place right now with the market. There's not really a safe haven right now. There's not really a place for people to hide their money. The market is just kind of moving together. The only thing that's like showing a slight inverse correlation right now is the yields. The bond market, the yield market. It definitely seems like ES is more bearish today. So if we do continue downward, it does seem like ES is partially leading. Okay, slightly bottom heavy on this candle here, building a strong node at 70, so you need to hold on to that node. If they start bouncing and building a lot of buy pressure around like 75, then you're obviously not leaning too bearish here. Keep an eye on our lower levels coming up. We have a level coming up at, actually funny enough right here, 62. And then we have another one at 36. So 62 target basically being hit already. NASDAQ 608. Good morning, future. Did my stream just crash? What happened? I think we're okay. Give me 1 second. My browser just started crashing a little bit. Alright, that should be okay. I think my Opera was having a memory issue. Keep an eye on these EMAs, getting very trendy here, staying below that 80 EMA, not allowing it to rotate back. Getting a lot of bearish delta down here. They need to push away from it very quickly or it's going to start looking like absorption. There's a ton of bearish delta from 67 down to 62. It's about a 5-point range. There's that 62 target, by the way. 36 is the next one. Keep an eye on this 30-minute close. You only have a few minutes left, and you will have single prints going back to 68 if it does not bounce here. Those yields are running again, which is showing a correlation. You see that bearish pressure on equities. They have 1 minute left here to repair this candle. If it stays above 68, it will not have single prints. If it continues to fail that 24, then it probably will. It will have some single prints, right? Good morning, Future. Good morning, Mauser. Yeah, 30-year and 10-year are running. Definitely one of the big reasons why we are coming down here. Starting to look like a great example of a micro pullback continuation here. We had the micro pullback yesterday, little D-shape profile, a lot of chop. And now we are trying to stay below that, build value below it, continue lower. Keep an eye on that. Our first target has been achieved on ES, that 62 level. And then we have a prior low around 36. Very close to that first level on NASDAQ, around 608. You need one more push. Very likely we'll have single prints going back to 800. You only have one single print on ES. They did a very good job repairing that on that last push back up before the close. Single prints have been filled in. You need to pop into like 800 on NASDAQ if it wants to fill them in. This chart right here is the main reason why we are looking pretty bad today, if I had to guess. The bond yields are running pretty hard. Yeah, here's the bond volatility index. You can see it's spiking the last couple of days. Yeah, look at the bond ETFs here. TLT and AGG, two of the biggest bond ETFs, and they are nuking. Keep an eye on that 24 EMA. As long as that 24 EMA is protected, we will most likely be continuing lower here. Explain why explain in your words why rising yields are negative for equities. It's just been like the lifelong correlation of the market, right? Bond markets, yield markets are like the enemy of the stock market. It's seen as like the easy money, right? So if you can get a very good return on basically free money, it's not exactly free money, but basically free money, then people would rather invest in these yields than they would in the stocks, right? It also affects earnings, right? The stock earnings. When rising yields go up, when yields go up, there's a higher discount rate. And then in layman terms, the money that they're, how do I say this in an easy way? Future money is worth less, is like the easiest way I can say it. The like risk-free, the easy money is more attractive because it's safer, right? Yes, you could see it as selling bonds, or you could see it as people are requiring more return for their investment. Another correlation would be like the Fed stuff, if you want to talk about the Fed stuff. The yields are not, it's like they're like loosely tied to inflation. So if yields go up consistently, you could say there's higher inflation expectations. If inflation goes too high, then what does the Fed do, right? The Fed doesn't want to cut rates. Cutting rates is seen as bullish. So if they don't cut rates, that's bearish, right? So yields going up, higher inflation, they don't cut rates. If you're not cutting rates, you don't get that spike in buy pressure on equities. It's a lot of bullshit, right? It's a lot of macro bullshit that we don't really need to know as day traders. You need to understand just like the layman, simple correlation that yields going up, typically, not all the time, but typically, it is bearish for equities. It's more so bearish when it's aggressive, like it has been recently. If it's like a very slow grind up, it doesn't usually have a strong correlation, as we saw over the last few months. But if it's like ramping up, that's kind of a sign of panic, right? That's a sign of something happening behind the scenes. There's some fear going on. There's some panic going on. Maybe they're fearful of inflation going up, that sort of thing, right? That's why I looked at that volatility index. I was showing you guys that volatility index, which is move. If you just put in move, it's the bond market option volatility. So typically when this is going up rapidly, that correlation is stronger. So when the yield market is getting very aggressive like it has been recently, that's when you really start to see that correlation. Look at the spike here in the yields. It almost lines up perfectly with this spike here to the downside. But look at all the chop. It's been going up for a while. But it's been going up it's pretty choppy, right? A lot of pullbacks. But now it's like going straight up. So the volatility plays a major factor. Yeah, exactly what Mauser said. It's not exactly that people are selling bonds, it's they are not finding them as attractive at the current yields. They need higher yields. They want more money for their investment. They want more return, I mean. If you look at the bond auctions, they call them like tails, right? How extreme are the tails? Good day, Wally. What's going on, man? Bond prices are tied to currencies too. Yeah, that's why I don't get into the fundamental stuff or like the macro stuff a lot because it's like a spider web of bullshit. It's like a spider web of all these different correlations and how they play together. How does it affect the inflation numbers? How does it affect the cuts and the hikes? How does it affect the currencies, like the dollar? It's just like a spider web. Well, that's exactly why I call it bullshit. I'm a day trader and a scalper, so I don't really give a shit about the spider web. I care about the direct relationship to what I am trading. Do you play long-term investments? Yeah, I have long-term accounts. Yep. I don't have a lot going on in like my short-term accounts right now. Like yeah, I normally pick like a basket of stuff that I'll do like quarterly, or I'll do like options. I'll pick like sectors. We used to do that a lot. I used to talk about it a lot on stream. My short-term stuff, like my short to mid-term stuff, I haven't been doing too much recently. But yes, I've got long-term accounts, like retirement accounts, stuff like that. Keep an eye on this 24 EMA and 8 EMA. You're starting to trend a little bit again. If you lose this 30-minute low, you're still looking pretty good for lower value. Do bond yields increasing mean cost of living increases? It's not a direct correlation, but like I said, there are some correlations with inflation, yes. It's not like a one-to-one. But yes, there are arguments that yields and inflation run together. I've never seen that, Chris. What is it? Is it like a bond ETF or something? But yeah, to go back to your inflation question, it's exactly what I said earlier. They want more return for their money. So, like, if they see inflation at 2% long term, they're not going to accept a bond yield below 2% because they're just going to lose money to inflation. So, that's kind of the argument of like, if the bond yields are at 5%, that means that people are thinking long term the inflation is going to be going up. So, they need to get more money for their purchase, right? They need to get more return. That's kind of the argument. They're like expecting higher returns to outpace inflation. If it's not currently outpacing what they think inflation will be, they're going to demand more. Oh, it's a single stock? Yeah, I haven't seen that. What is that? What'd you say? ELF? Elf Beauty? Yeah, no idea. I don't really invest in that sector. Not big into the retail, not big into like the cosmetics, I guess this would be. So I'm not sure. Looks like it's been dying for 3 or 4 years, so that'd be one you're just expecting to go back to where it was. And you're buying it on earnings, so you're basically flipping multiple coins at the same time. Good luck. You're flipping the coin of does it go back to where it was 2 or 3 years ago, and does it beat earnings? Not really a technical move. There's a lot of stocks like that people they want to. It's kind of like the Rivian trade almost, like the same thing that we were looking at with the Rivian trade. You're expecting it to get back to its glory days, kind of back to where it was a few years ago. But Rivian's a little bit of a different story because it has that pattern. It has that technical pattern of accumulation that is showing that it wants to get back to its glory days. Now, that pattern has been very weak the last couple of weeks. It's been getting hammered. But gave us a really good push back into 20. Yeah, Kara, so you're asking, like, what are the main correlations you want to look for when you're day trading, like ES and NASDAQ? Like, what should you have on another monitor and kind of just keep track of? The biggest ones are the dollar, DXY. During crises like war or like oil shortages or something like that, you want to keep an eye on oil as well, but not all the time. Oil's not like a daily thing. It's just like when global events are happening. Bond yields really help. 10-year mainly. The 10-year is kind of the closest correlation to the futures market. The 30-year is probably like the second, or they interchange like 1 and 2. That's pretty much it. I mean, obviously, you can watch the individual names. Like if you want to watch the big companies, Nvidia, Microsoft, Apple, all that stuff. That's kind of just a given, though. Like that's what they're moving based on. In the that's the entire purpose, right? ES and NASDAQ are just following these names. So if you want to watch the individual names, you can. But if you're looking for more of a broader correlation, it's basically dollar and like bond yields and oil. That's pretty much it. during massive runs, you could argue like gold and silver. You could argue like Bitcoin, like crypto big names. But those not so much. Those are like they're like quarterly. They're like events. You need something to happen for those correlations to really be significant. The correlations that are pretty much always there, unless it's kind of a weird market like it is right now. The dollar, bonds, yields, those are pretty much always there. Has to be a strange market like it has been the past like 30 days for the correlations to be broken. The correlations are slowly coming back now. But yeah, like the big names and stuff, that's just a given. The market is obviously just moving because of them. It's following them. The problem is seeing like what sector is actually leading that day. A little bit of a double bottom here on NASDAQ, possibly pushing back to VWAP. Has to stay above these EMAs here. That's nearly a 20-year high on the yields. Going back to the Great Recession. It's like I say, the bears always need a narrative, and that's their narrative now. The rising yields dragging us down. It's a great time for the yields to rise as well because the tech stocks are like forming that kind of topping pattern. So it's already getting the bears excited. So tech stocks already topping out a little bit. You push the yields up pretty hard, and then you get a little bit of a panic sell. And we haven't been talking about it much. There's not a whole lot of headlines, but you still have the Iran stuff going on. So if that fires back up pretty soon, then there's another narrative there. You're almost approaching like that perfect storm for the sellers. It seems like a lot of stuff is lining up for them to have a strong narrative pretty soon. It's like I said today during our trade plan. The cracks are already showing, right? If you start building lower value outside of this micro pullback, you've kind of already lost the trend, and now we're like confirming lower value. So keep an eye on that trend VWAP. The trend VWAP is back down to 71. That'd be around 27,000 on NASDAQ. That'd be like the best bearish target if the bears actually got their move here. Speaking of correlations, let's take a look here. We'll take a look at the last quarter. Last quarter, the strongest correlations we have. There's actually pretty strong correlations across the board the last quarter. So yields are negative, dollars negative, meaning inverse, right? The euro is positive because it's inverse dollar. Oil is negative. Bitcoin is positive. And gold is positive. So the only weird one here is gold. Gold's not normally positive like that. But everything else is pretty much where it should be. So it's getting back to normal. The correlations are coming back. Let's go back to more recently. Let's just look at the last 5 days. Last 5 days, about the same actually. Bonds are inverse, dollar inverse. No correlation on oil, as we've seen recently. Bitcoin is positive, very positive. And gold is flat. Ebola spreading? No, I don't think so. They tried that a few times and it just doesn't it doesn't pick up. They try to do the Ebola and the what's it called, the hantavirus or whatever it is. They're trying. It's not picking up. I don't think people are actually too scared of that. I think after COVID, it's very hard to push people back into that mindset. I think they could do it like years from now, but not like this close. I don't think they could do it like in the same decade as COVID. The hantavirus, yeah, like hantavirus, Ebola, they're obviously scary. They're not like global pandemics. They kill people too fast, right? COVID was a perfect storm. It was killing people, but it was also very contagious. It was spreading very quickly, right? When you have viruses like Ebola and hantavirus, they kill so quickly that it's very hard to spread. It's very hard to turn into a global pandemic. That one's a way more advanced. So that one's looking at the comparison between the yields in the US and the yields in Japan. So that was there to watch the carry trade. As that yield spread tightens and gets smaller and smaller and smaller, the carry trade comes off. And there's not a massive incentive for people to do the carry trade where they grab yen and invest it in, they convert it to dollars, invest it in the market, right? With the massive change in the Japanese government over the last year or so, that carry trade is not really as strong. It's not really there at all. It's probably happening a little bit behind the scenes, but it's not like controlling the market. Keep an eye on VWAP here, possibly a bear flag into VWAP. See if those sellers come back in. Trump is making some statements right now, which is why we're moving around a little bit. That's just VWAP. Just drawing a VWAP from the session VWAP. If you're trending very aggressively away from VWAP on oil, that's typically when you get that correlation. We're not doing that right now. It's just rotating around VWAP. Yeah, the biggest thing with housing, well, there's two big things with housing. It's a supply issue and obviously a rate issue. The mortgage rates are pretty high. Historically, they're not that high. They're not much higher than like the historical average, but they are high relatively speaking from like the COVID rates, right? But a big thing is supply. There's just not a lot of homes being built in the areas that like want them the most. I forget where it was, but I think it was in like Texas or something. Um, was it like Austin or Dallas or one of those? One of those. I can't remember what it was, but they they saw that as an issue and they started pumping out houses, and the home prices, the average home price came down quite a bit. So it wasn't just the rates, it was obviously a supply issue. But yeah, I forget exactly where it was, but I was reading about that recently. I think that was earlier this year or like late last year. problem is a lot of these places you can't do that. There's not really a lot of land left over, right? People need to move out, expand. Yeah, what are the probabilities right now for the rate cuts, or sorry, the rate hikes now, I think. Let's see here. Yeah, so it is shifting into a hiking environment. 13% in July. Wow, 30% in September. 41% in October. And about 60% in December. So they're betting on at least one hike before the end of the year. That's kind of crazy. Yeah, of course. Of course, it's tied to like material cost and how much they can make, obviously. But that is a big issue. It is a supply issue. It doesn't matter why you say there's a supply issue. Could be regulation, could be the inflation cost and the materials, whatever. It all boils down to a supply issue. It's definitely not a demand issue. The demand is sky high. That's why every time the rates come down even a little bit, we see that housing data go crazy. I mean, look at the housing data today. The housing data was higher than expected. Look at the housing data we got at the start of the month, or I think it was like the last month, wherever it was. It was much higher than expected. I don't think it was the recent one, it was the one before, I believe, right? I was actually going back to March. March like doubled the expectation or whatever it was. What was it here? Or not double. Doubled is way too much. 3.9 to 4.1. Doubled was pending. You can do that in pending, not in actually existing. Pending is percentage-wise. Existing is a flat number. But yeah, we had one of the pending numbers come out percentage-wise. It was really, really good. And then we had the existing one come out really, really good. When was that? It was March. Yeah, March was the same one I was thinking of. Yeah, 1.8%. They were expecting negative 0.6%. And then last month, 1.5%. They were expecting 0. So very big beats on those. Yeah, it's what I just said. They're expecting a rate hike by the end of the year, by December. That's a long way away, though. We'll see what happens. We already saw this play out when they were talking about cutting like crazy, and they ended up not doing it, right? Not seeing that bear flag in the VWAP here. You tried to fail VWAP, bounced off the 24. As long as it stays above that 24, you're trending through VWAP here. You need to lose that trend. Keep an eye on the session VWAP, 84 and 894 on NASDAQ. Obviously failing the bear flag on the daily because you're bouncing off that 24. Second attempt at a bear flag here. It needs to stay below this 24. Keep an eye on that 24 because that's kind of where the uptrend is, right? That's where the passive buyers need to protect that uptrend. So if they turn into passive sellers, then obviously they're coming back down to that prior low. Bad version of a bulldog? Not really. I think if you were going to say that, it would already be done. It would have been this pullback here. Because it would have been bottom, curve back, bottom, pop up, pull back. So this would have been the bulldog here. So that would have been a bad version of a bulldog. And then this is exactly why it's a bad version of a bulldog. Because it hit VWAP and then instantly failed. So yes and no. It is there, but it's not right now, if that's what you mean. Okay, second attempt at the bear flag and a VWAP here, obviously working. Keep an eye on the low here. If you lose that 30-minute low, you do extend that lower tail, and our next level is 36. Very weak below 68 here. Look at the exhaustion here. Sellers getting completely exhausted on the move down. You need to find some lower value pretty quickly. It can very easily recover this move, which it's already recovering like half of it. The move, I mean here, not the entire move, just this little portion here. Okay, here's the problem with the exhaustion we talked about. They recovered that move very easily. Now, this is a lot harder to recover, or it should be, right? So they need to stay below 73 if they want to stay bearish here. Possibly getting stuck in like a half rotation. You did this yesterday, damn near the entire afternoon. It was stuck between the POC and the value low. And it just kept rotating, but it was only doing half of it, right? It wasn't rotating to the value high until the close. Then you had that big spike. So keep an eye on that. If we cannot stay above that POC node, that's probably what's happening. If you do break above that POC, I'd say like 75. You're rotating back to 92. NASDAQ would rotate back to 29,025. But all right, guys, we're going to start closing the stream up here. We can do a giveaway real quick. If you guys get the likes to 100, we'll do an Apex account giveaway. If you guys are heading out, I appreciate you being here. I do stream Monday through Friday, 9:30 in the morning, so I'll see you guys tomorrow, same time as always. If you guys are in Discord, I will be streaming the rest of the day in Discord as well. If you guys would like to support the channel, you can hit that like button. Be sure to subscribe. You could also use code BREW on Apex. I believe it's still 90% off until next week. I typically recommend the 50K accounts, or if you think that's a little too low because the market's pretty volatile right now, I'd go a little bit higher. The trailing drawdown or end of day drawdown, that's really personal preference. I think most people prefer the end of day, but that's just up to you. If you guys do use the code with Apex, just hold on to those receipts. I will get those from you probably next week, actually. Probably starting next week. I'll start grabbing those from you for that raffle. And we'll do our monthly raffle at the start of June. All right, let me go ahead and get that giveaway ready real quick. Give me 1 second. All right, if you guys have not participated in a giveaway before, it is pretty easy. Just pick a number between 1 and 50. Just pick one number. And go ahead and type that in chat. Press that live button. Make sure you do not have a large delay on the live stream, so you know if I pick your number. Don't worry about if somebody else picked your number. We will do tiebreakers if there is a tie. So just pick one number between 1 and 50. Have your email ready. I'm going to verify your email. I'm going to send you a random number. You type it in chat. I send you the code. Just make sure to press that live button. A lot of people have a large delay on stream and they don't realize it. Press that live button. Make sure your delay is like less than 10 seconds. I'll give you guys another minute or so. This will be for an Apex account, so make sure if you're participating in the giveaway that you can sign up for Apex accounts. There's very few countries that can't. But if you are in one of those countries, obviously it will not work. All right, last chance. Get your number in. Pick one number. I will double check. If you pick more than one number, you will not win. What are the ones that can't? Whatever's regulated by the SEC. There's like a list that like list of countries that the US cannot connect to, like with brokers and whatnot. Some countries in like the Middle East, some countries in Africa. I think there's some in Asia. Pretty much all European countries can. The SWIFT sanctions, yeah, basically, yep. Okay, good luck, guys. Last number I see is from Anthony. And damn near was Anthony. Unfortunately, you're one off. Number 8. Does somebody have number 8? Austin, you have number 8. Let me double check. Did you only pick one number? You did. Yep. Does anybody else have number 8? I don't believe so. I think it's just you, Austin. Last chance. Is there anybody else? Was that the first number picked? Oh, it was, yeah. I was really lucky, man. Here is my giveaway email. Just go ahead and send me an email with your YouTube name. And I will send you a random number. Just type that number in chat. Random ain't so random. Yeah, well, they're not connected at all, so that has nothing to do with it. If it was connected to chat, then I'd be like, oh, these systems are a little wonky. Might not be true random. Yeah, that's just a Google number generator. Now, I will say the Google number generator, for a little while there, was getting a bit biased. I think we had like 5 or so rolls in a row that they were like in the 30s. It was like 37, 35, 34. It kept doing 30s. So that's when I went to like the 50 and 100. If it seems like it's getting biased, we just switch our numbers a little bit. Yeah, let me take a look, Austin. I sent you a random number. Just type that in chat. If you guys are heading out, I'll see you in Discord. If you're not in Discord, I'll see you guys tomorrow. I appreciate you being here. Be on the lookout for another short today. Short coming out at 4 p.m. We're going to keep our same schedule. Tuesday, Thursday, Saturday, Sunday. Like I said before, if you haven't caught up on the other shorts, we've already put out like 10 to 15 of the new ones. We have a bunch from last year. But the new ones, we've put out like 10 to 15 of them. So check those out. They'll definitely help you out. I see you, Austin. Oh, you know what, Austin? Let me double check here. I might actually be out of codes, but I can get more. So it might just take me a day or so. Let me double check. I think I literally just gave away my last code. I am, yep. Okay, sorry, Austin. I am out of codes right now. I'm going to get more. So give me like a day or so, and I'll send you one. That's my bad. I should have double checked. But all right, guys. I will see you tomorrow. If you're in Discord, I will catch you guys there. Peace, everybody.